Uber versus Waymo. Who actually wins the mobility empire 10 years from now? Picture this. You open your Uber app tonight, a car pulls up, and there is no driver inside. The wheel is turning by itself, and somewhere on your phone, your Uber stock ticker is sitting deep in the red. Your stomach drops a little. You bought in last year because it looked unstoppable. Now every headline says Waymo, Robotaxi, disruption. And a quiet thought creeps in. No, wait, is Uber about to get replaced by the very thing riding around in its own app? If that thought has been sitting in your gut, stay with me for the next few minutes because you are about to see something almost nobody talks about. There is a number buried in Uber's own earnings report that completely contradicts the panic. And once you see it, you will understand why the stock being this cheap right now might actually be the loudest signal in this entire story. Here is why this video matters. Everyone watching the Robotaxi headlines is asking the wrong question. They are asking, will a robot replace the driver? That is not the question that decides who wins. The real question is, who owns the moment someone opens an app and asks for a ride? And the answer to that question is quietly being decided right now, while the stock price is doing the opposite of what the business is doing. My name is Moon. I obsess over where money actually flows inside mobility and AI platform companies, tracking the difference between what the headlines say and what the cash actually does. If you are staring at Uber sitting near its lows, unsure whether to buy or run, hit subscribe, and if this helps you see it clearer, drop a like too. Here is exactly what we are covering, where the money is actually moving from and to, who is quietly making the biggest moves behind the scenes right now, and by the end, exactly what you should be watching next. Let us bust the biggest myth first. Everyone pictures Uber as just an app that calls you a car or brings you food. But here is the part that breaks that picture completely. Uber does not own a single car, not one. The drivers are not Uber employees. And right now, in cities like Austin, Atlanta, and Phoenix, it is Waymo's own robotaxis picking people up. Inside the Uber app. Sit with that for a second. Waymo is supposed to be the company that ends Uber. So why would Waymo hand its own robotaxi rides over to its biggest rival's app? That single decision tells you almost everything you need to know, and we are going to come back to exactly why in a minute. Let us look at the numbers, because this is where the disconnect gets almost absurd. In the first quarter of 2026, Uber posted $53.7 billion in gross bookings, up 21 to 25% year over year. That beat the high end of management's own guidance. Meanwhile, the stock dropped nearly 30% from its 52-week high of $102, sitting down in the low 70s. Do the math with me, because numbers hit differently than headlines. If you had put $1,000 into Uber at the peak, your account would show around $700 today, a 30% loss on paper. But the actual cash the business generates did not shrink, it grew. Free cash flow over the last 12 months hit $9.8 billion, up 42% year over year. And with that cash, Uber bought back $3 billion of its own stock in a single quarter. That is real money if you are converting it, moving in one very specific direction, back into the company's own shares. So ask yourself, if the business is compounding and the company itself is buying its own stock, hand over fist, why is the price still stuck near the floor? Because the market right now is trading on fear, not on the spreadsheet. Now let us talk about who is actually making moves here, because this part is where people usually stop paying attention, and that is exactly the mistake. Nvidia is partnering directly with Uber to power one of the largest autonomous vehicle networks on Earth. Waymo, Waabi, Motional, WeRide, Nissan, and Wave. More than 25 autonomous vehicle companies have already plugged themselves into Uber's platform. Waabi alone raised $1 billion while expanding its Robotaxi partnership with Uber specifically. And look at how Wall Street is actually voting with real money. Out of 51 analysts covering this stock, 45 rated a buy. Not a hold, not a sell, a buy. The average price target sits around $104 to $109, roughly 45 to 48% above where the stock trades today. When almost 90% of professional analysts are pointing the same direction while retail investors are panic selling, that gap itself is information. Here is what most people genuinely do not realize. For an autonomous vehicle company, the hardest problem was never the technology. It is getting enough riders fast enough to make the economics work. That is exactly why company after company keeps choosing to plug into Uber, instead of spending years building their own app and their own customer base from zero. Now here is the real battle, the one the headlines never actually explain: Uber versus Waymo. Think of it like a brilliant chef versus a massive delivery platform. Waymo is that brilliant chef. It builds its own cars, its own sensors, its own software, everything from scratch, in-house. But that chef can only cook inside a handful of kitchens, a handful of cities. Uber, on the other hand, cooks absolutely nothing itself. What it owns instead is 200 million monthly users who are already opening the app, already ordering, already trusting the brand. So even the best chef on the planet, if they want customers fast, the quickest path is not opening their own restaurant on every corner. It is joining the platform that already has the crowd standing at the door. And that is not a theory. That is literally happening right now in real cities with real riders. Waymo is not pushing its own separate app in Austin or Atlanta. It chose to ride inside Uber's app instead. Distribution wins. That principle is not playing out in some future scenario. It is playing out this week. And here is where it gets even more interesting. And honestly, this is the part almost nobody is talking about yet. Uber is quietly redefining itself, not as a robotaxi company, but as a data company. They built an entire division called Uber AV Labs, using thousands of sensor-equipped vehicles to capture real-world driving data across 600 cities worldwide. That data gets licensed out to autonomous vehicle companies training their own models, which means no matter which robotaxi company eventually wins the technology race, Uber still owns the data layer underneath the entire industry. Think back to the cloud computing boom for a second. When artificial intelligence exploded, who actually made the fastest, most consistent money? It was not always the company with the flashiest new model. See, it was the company that owned the infrastructure every single one of those models had to run on. Uber is quietly trying to become that exact same infrastructure layer, except for mobility instead of computing. Now, I know exactly what you are thinking right now because I would be thinking it too. Okay, but what if Waymo eventually just goes fully direct with its own app and cuts Uber out of the picture completely? Fair question and worth taking seriously. But think about actual human behavior for a second. Are people really going to download a brand new app every single time they land in a different city just to maybe save a few minutes? Uber already has over 200 million monthly users, and 40% of them use more than one Uber product already, meaning the habit is already built in. That habit, that existing data, that switching cost is exactly why even Waymo, with all its technology and all its money, still chose to join the platform instead of fighting it head-on in the open market. So, with all of that in mind, what should you actually be watching from here? First, second quarter earnings on August 5th. That is the moment we find out whether the market finally starts pricing in the actual growth instead of the headline fear. Second, watch Uber Eats expanding into full retail. Brands like Kiehl's, FedEx Office, Academy Sports, and Blick Art Materials have already joined the platform, and that single storyline alone sent the stock up 6% in a single day recently. Third, watch the Delivery Hero acquisition and the new Expedia partnership, both clear signals of fresh growth channels opening up beyond just rides and food. And fourth, watch the autonomous vehicle expansion itself, 15 cities by the end of 2026, with Tokyo launching in the second half of the year. If even one single one of these beats expectations, the gap between the stock price and the real underlying business could start closing very fast. And often that kind of re-rating happens quietly before most people even notice it started. So let us bring this all the way back to the beginning. Where is the money actually flowing? It is moving away from companies that just own the cars and toward the one company that owns the marketplace and the data sitting underneath all of it. Right now, that company is trading at a discount, while Nvidia, Waymo, and Uber's own AV Labs division are the ones actually shaping the next 10 years of how humans move around cities. Now, to be completely clear, this is my read on the situation, not financial advice. Competition is real, regulation is real, and none of this outcome is guaranteed. But if all you have seen up to this point is a headline telling you robotaxis are killing Uber, remember what we just walked through together. The actual money, the actual cash flow, the actual buybacks, and the actual partnerships are all telling a very different story than the headline. So how did this land for you? Watching the data instead of the headlines is exactly what protects your account when everyone else around you is panicking and selling into fear. If this helped you see it more clearly, hit subscribe, drop a like, and let us keep digging into where the money is actually moving before the headlines catch up to it. Protect and grow what you have built